On behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Financial Compass with Mish Schneider. I am your host, Todd Schoenberger, and joining me as she does every week is the chief strategist at MarketGauge.com and the founder of the Economic Modern Family channel on YouTube, Mish Schneider. Mish, welcome to the program. We have to talk about going to war. It seems that this is now a monthly occurrence these days, and you have a stock market that is just sliding as a result of all this uncertainty. However, oil stocks are up. ExxonMobil is just a cat's whisker away from another 52-week high. How should the audience be trading this momentous occasion?
Well, as an old-time crude oil trader, war is definitely a very great time to make some quick money. But
Yes.
We have to also realize, and I say this all the time, so I'm going to say it again, you can't think out long term when you're trading off a headline. And hopefully, for the folks that have been listening to this show, we've been talking about I was bullish oil now for a while, and I'm in oil. I bought it, I got out, I got back in, right, because I was worried that if things turned out not to be as critical in Iran, the oil could collapse or what have you. I mean, there's so much mixed fundamentals. But when I realized that I had a really good risk, I got back in. I was like, what the heck? So essentially, what did we talk about? How to hold 61. It did. How to clear 64. It did. 66 was next. That's where we're at right now, over $66 a barrel. In June 2025, we got up to 68.56. About in terms of oil, depending on what month you're looking at, but let's call it $68 to $69 a barrel. So we're not quite up at the June highs yet, which is probably the last time, right? We had these Iranian headlines and nothing happened, and that's why it sold off. So it's really going to be a question of whether or not this time is for real. Number one, whether it can be solved diplomatically. Number two, and of course, I think a really interesting headline that came out today was the UK said that we can't use their airspace to go into Iran. So that could even be a different type of issue setting up. And that makes oil very attractive now. But if you're going to be first getting in over 66, which was my breakout, you probably don't want to be long if it breaks down under 64 again.
So why aren't the metals then rallying off of this uncertainty?
That's a really good question. I think they're going off of different fundamentals right now. Remember now, even though we've seen geopolitical stress, this Iranian situation is not new, as we just talked about. We had this explosive move in the metals. A lot of people feel that it's still extremely bullish longer term. But as I'm looking at the charts, we have silver under a 50-day moving average. So right now it has to get back over that $79 a barrel, $79 an ounce. And gold, which is fluttering around the 5,000 mark, really, I don't think has that much upside from here right now. So I think what we're seeing is a departure from the geopolitical stress, somewhat of a, one word for getting used to, maybe, just sort of more apathetic to conditions with debt and spending. And just really on pause. I like gold a little bit more than silver right now because of the ratio. So I think we have to look at that gold to silver ratio if I'm going to give like an actual stock trading tip. We had mentioned the ratio could go back to 65. It's at 64 right now, which of course would favor gold. If it breaks out over 65, it still favors gold more than silver, but it also means that we could still see a further correction, especially if these Iranian headlines go away. So I'm waiting. If I'm going to buy silver now, I want to wait for it to get back down to $60 an ounce, which it's possible. If it gets over 79 in a wartime situation, again, if I was a commodities day trader, I'd be like all over that. But if I'm trying to position myself, I think probably be more interesting to look at the oil and natural gas. And again, let's go back to our food conversation as well.
Well, we'll get into that in a second. What I don't understand is we had Operation Midnight Hammer. We knocked out the nuclear capabilities for the Iranians. Yet,
supposedly.
Yeah, okay, but I don't understand. I think Americans are confused by all of this. Like, why do we need to have this moment? And I get it. If they are facing and looking to shoot Scud missiles, for example, ballistic missiles into Israel, We have to protect our allies. It's just what we do here in America. So I can understand that being the reason, but there doesn't seem to be a strong narrative right now out of the White House selling this to Americans. And I think that's going to cause even more uncertainty with the markets. But we've talked about this before, though. Oil is it's an enviable business model when you're in the Middle East. When you can start beating that war drum, it causes oil prices to go up. And when I see a stock like Exxon up 23% year to date, 23% for ExxonMobil is just incredible. If that's the case, Mish, are you looking at those types of equities for trading, or are you just simply looking at the crude contract?
I think that as a commodities trader, I know how to trade commodities. And I think, of course, Exxon is doing really well. Some of the other oil companies, not as much. But to me, it's really going to be what's the picture besides the Iranian situation? And that's where the confusion lies, because we keep hearing one side of the equation says, oh, there's a glut. And now stories came out yesterday about Venezuela can produce 300 to 500,000 barrels a day more. Well, we don't know if these headlines are real or not. I also see headlines that the oil producers, we're still seeing a decline in rigs. We're still seeing the Permian Basin pretty much inactive. So you don't really know. And then I saw another story today where it said, oh, oil at 65, 66, or even $70 a barrel. Oh, we're still not worried about that because it's not like it's at $100 a barrel. So if you put that all together, basically what it says to me is if this starts another elevated move in oil, and by the way, a lot of ratio watchers, including myself, said that this was coming, one reason or another, because that gold to oil ratio gets stretched and it favors oil. And that's what we're seeing, which is why gold sort of stepped aside. If this is a real rally and we get back over that $70 a barrel, and now the conversation is, oh my God, the whole thing was to keep gas and oil prices down, and now we're not. I don't think that will change the administration's viewpoint on Iran, but I bet they're not talking about it much because they know that it may not be so popular, and because Americans know that this is going to drive up oil and energy prices. And there you go. So I try to just watch on the price. And right now, today, this is an interesting breakout over that 64, now 66 level in oil. So keep your eye there. I would bank I actually took a teeny little profit today, just because, I had a nice move there, and I always do that. Trailed up my stop, but I still think that there's more upside to downside. And I want to talk about natural gas too, because nobody talks about that.
Well, please do.
Well, again, it sold all the way off because it originally rallied on the weather situation. As far as I know, if you're looking at the Russia-Ukraine, that's certainly, you don't get much headlines there, but nothing good has happened there. They're still having drone wars, and Ukraine is still firing drones at Russian oil fields and natural gas. But let's forget about all of that for a second. If oil gets too expensive, even with a glut of natural gas, and I've talked to people in the Permian, they say there's so much gas in this country, we've got a ton of it. But that doesn't really matter, because what happens is if the focus becomes, well, oil's getting expensive, usually that's good for EVs, number one, because people start thinking, and I don't want to go off to the side too much, but we talked about Ford and the CEO, he's going ahead with those $30,000 EVs, but it also could be good for natural gas. So right now, I'm looking at it, it made its low last month, and it had that big shoot up, and now it's back down, but not near that low. I'm watching that very carefully, because I think if we can get over, say, 320 in the April contract, because we were talking March, now we're talking April, hold 280, I think that could be another surprise too, something that people's eyeballs are not on, and people are afraid to trade natural gas. Not me, I trade it all the time. You just have to know when. And right now it feels percolating to me.
Okay. I get that. So we'll see how that plays out. And obviously with the oil trade, and if something does happen by the time we come back to our next show next week in Iran, I'm sure that's going to impact oil. The thing, I'll just leave you with this editorial, though, on the oil trade. It's interesting that we were talking so much about Venezuela and the heavy sour crude variety, that's really kind of been put on the back page. And now it's just this rise in what we've seen in the big oil companies, but also the refiners like a Valero Energy. So we'll see how it plays out. And like you said, Nat, you're bullish on natural gas. So I have to ask about copper, though. We get a lot of audience comments and questions, as you know, Mish, and everybody is concerned about the copper trade. They know that there was a retreat in gold and silver and copper, but what gives? We're still building AI data centers, right? So is this a trade that we should take advantage of since we've sold off so much in the past few weeks?
Yeah, let me take a fresh look at high grade copper. It's not something that I typically trade, and I think that's just old habits. Because when I was down on the Commodities Exchange, I was a member of NYMEX. And interestingly enough, copper was not part of COMEX, which was the metals. It was part of NYMEX, right? Which was oil, heating oil, natural gas. So it was kind of like a small pit somewhere else on the floor, not in the main floor, that I barely paid attention to. And so I'm just saying that it's not a great excuse, but it's really been the reason why I haven't been all that interested in copper.
Okay.
I would not buy it. I would not buy it here. And if you want to relate it to AI, yes, there's still going to be the building of the data centers to a degree. But I think one of the reasons why we've seen so many of those stocks sell off is because of the capex. And then the reality of the situation is how expensive and how much money are these companies willing to throw at the building of this, considering rising costs. So maybe it's great for this, for the AI companies if copper price comes down. But right now I'm seeing it kind of looks toppy. You know, we had that one little peak in the middle of January, really, sort of January, February. It's come off since then. It's consolidating. But if you want me to put a number on it, I would say 560 if you're looking at the March contract, has to hold. Otherwise, I think we're going to take another trip down to around 5, and then perhaps I would be interested there. Copper just has no interest for me right now. Like I said, even gold and silver are kind of like, I'm watching, and they could have a reaction.
Right.
But I would almost err to the side of lower prices coming.
Okay. Well, I mean, and that remains to be seen. I know you're looking for your entry point to get back into the metals, and if the sell-off continues, obviously it'll probably happen sooner than later. Let's turn the page to the retail sector. We had Walmart earnings this morning. Big disappointment. Walmart actually has been performing great over the past couple of years, while its peer Target has just been taken on the chin. They just been getting knocked around. So with that, do you think that this is a sign that maybe we should completely stay away from that retail sector, at least for the foreseeable future?
Well, what was interesting about Walmart, they said that people that make over $150,000 have been their main buyers, you know, which is interesting because Walmart's a discount store. Mm-hmm. And people who are making under $100,000 are really pinching their pennies. And that is something that we're seeing. I mean, Costco's done better, of course, because Costco has a lot of goods are made in America, and Walmart still imports a lot of goods. And I think the bigger story than Walmart really was the trade deficit today, which was at the widest that it's been since the 1960s. So it's telling you that the tariffs are definitely not bringing down costs enough to make a difference. And that's an issue. Now, of course, we have positive news out in the market too. The Philly Fed manufacturing was higher. The jobless claims not as bad. The labor market is not exactly deteriorating as people expect. There's so much there. So that's why I take all of that noise, I throw it out the window, and I look at my economic modern family, Miss Granny Retail.
Yes. Yes.
And I like her, you know, this is how much I've humanized it, because she has a good blend of discretionary and consumer staples, right? So it's such an interesting spot right now. I can't get bullish and I can't get bearish. And this is kind of how I feel about a lot of equities right now. It is sitting right on the 50-day moving average. In fact, if you draw the image of Granny in your mind and you think about her cane, the hook of her cane is holding on to that 50-day moving average for dear life. If we get through and we're looking at XRT 89, whatever the situation is, you remember the technicals always precede the fundamentals in my world. That would probably be a really good sign, not just for the retail sector, but also for XRT. If it breaks down under 85 and it's trading at like around 87 in change right now, then I would say not so much. And that's so interesting because if you look elsewhere, the SPY and NASDAQ are having bearish divergences in their momentum, meaning that the momentum is starting to collapse, showing a bear move is coming. The price is under the 50-day moving average, but Granny's husband, small caps, are holding the 50-day moving average and still have a neutral momentum divergence. In other words, no divergence. So that rotation is still there, but it's on pause. It's on pause, and I don't really believe that trading equities right now is giving you a great advantage because things have been so choppy until this works itself out.
So the divergence not occurring with small caps, though, are you suggesting then, like you said, now might not be the best time to be trading in equities? But if you are an equity trader, should
I am
small
an
cap?
equity trader, but
Well,
I'm an
yes, you are.
opportunist equity trader, right?
I'll rephrase then. So with that, are you focused then on the small cap side?
Well, like for today, we had stock ALMS reach a
Okay.
target. It's a small cap, a small to mid cap earnings growth stock. So the earnings growth story was good. So I think you have to pick very carefully based on the earnings and the balance sheets of the small cap stocks. That's how we vet using our models. In terms from a discretionary standpoint, right now, just watching the whole market before I would decide to go in and buy some more small cap type stocks. Like I said, Grandpa Russell is hanging on and leading. But if we start to see more deterioration in the SPY and the NASDAQ, it's going to be hard for that to keep up. So I want to see AI, software, some of the bigger stocks in the S&P find footing. And there are a few names I'm watching to find this type of footing, but so far my portfolio has shrank by design. And what I'm preferring to do is throw more money into things that are moving, particularly as they look at hard assets and also certain other types of commodities and a few stocks thrown in here and there.
Okay, well, I'm going to guess some of those other commodities are probably food commodities. So one question that we had from an audience participant was that they were asking if the ag trade, the agricultural commodities, are maybe the sleeper trade of 2026. What do you think?
Oh, yeah. But right now, because cocoa has been volatile and coffee's been volatile, if you're looking at DBA, it's a composite of a lot of different things. And we talked about this too. So I've actually taken my focus away from DBA per se, but not,
Okay.
I'm still watching. That 26 level has not been able to crack. If that does, I think that's a very positive sign. But I've been in soybeans for weeks. And I've been very clear about it. So hopefully some of your people bought SOYB, which is the ETF. And soybeans right now, I mean, I did a little research knowing we were going to talk about this, is in a consolidation mode. And if it gets through 1160, I think that has another leg. And what's interesting is wheat is waking up right now too. And if that can get through the 200-day moving average, which is where it's sitting right as we speak, or at around 562 if you're looking at the futures, that could also move. And those two things moving would be very, very good for DBA. But you have to remember with DBA, you're exposed to a lot of things. Sometimes that's great. And sometimes it's better to be more specific.
Okay. And that's a simple DBA for the audience so they understand. So, okay, with that though, why is wheat doing so well now? Wouldn't wheat, I mean, that just seems like it just should just be a regular trade with a 45-degree angle. I mean, what am I missing?
Well, it's funny because the USDA report that came out about a month ago was the low. And actually there has been controversy, which I wasn't surprised at all to see, about whether or not those numbers were right, even though they're satellite driven and one would think that they would be right. But it seems like, again, there is some crop issues. There's more demand than they thought. There's certainly issues with farmers. And I think also there's been buying by other countries that we didn't necessarily anticipate. I know China's been a big buyer of soybeans, but so have other countries. Plus, Brazil and Argentina that grow grain are having also some drought issues. So, this is always a story of supply demand. And I can't say that I have the USDA hard facts right here in my brain. But what I can tell you is that people were so convinced that food prices were going to go down, 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 and some have. But clearly, all the CPI and all these numbers that are coming out constantly showing inflation is declining, and all this talk of disinflation and deflation and everything else, with energy prices going up and food prices now looking like they have more upside, that could really change the picture. And I think that leads us to our next conversation, which is long bonds.
Yeah, and that's going to be the final topic of the show, because where do you stand there on the bond trade right now? I mean, are we getting signals from the bond market that we're not getting from the equity market?
Well, again, since we talk every week, not that I'm trying to blow my own horn or anything, I'm just trying to remind people that this is my life studying these things. And 2 weeks
Yes.
ago, maybe even 3 weeks ago, we started talking about buying the TLT. And at that point, it was trading at about 85, 86, and it got up to 90. So why is 90 so important? I did an avatar thing a couple of weeks ago on the 23-month moving average in the TLT chart. So I love that moving average because it's a 2-year business cycle. And it's really, really illustrative of an economic business cycle in contraction or in expansion, or just sitting there stagnant. And the TLTs, obviously, the business cycle has been in contraction with yields up, and that has continued to go down since 2022. But now it hit it on a monthly basis. And we're what? February 19th, we've got another week of February. If we close February over 90, I think regardless of everything we're talking about with inflation and war and everything else, I think that basically it's really signaling that at least that end of the curve is go down. And that's why we're seeing real estate all of a sudden doing better, because people are anticipating lower yields. If it can't get through 90, all it did was rally right to resistance. And then we're going to see higher yields coming back. And that's going to affect everything we just talked about, the Russell 2000, the retail space. I mean, they basically need, especially the small caps, need these lower borrowing costs. So we're at a precipice right here. This is not a really good time for people to go out and start throwing a lot of money at anything. Just be kind of cautious, because this too shall pass.
Uh-oh. So, I mean, seriously though, so TLT resistance
serious.
Okay, is at 90. We break through 90 by the end of next week, is what you're saying. Then we're looking at March being a thumbs up.
It will be the first sign of the trend shift in 4 years. That's powerful. When you have a downtrend for 4 years, and then all of a sudden you start to see the first signs of life on this 2-year business cycle, or this 23-month moving average. By the way, the 80-month is much higher. So it's not like it would be like, oh my God, we're going back to zero rates or anything like that. But we could at least see at that point a decent rally in TLTs. And people ask me, well, is that bullish for commodities or bearish for commodities? Because technically it should be bullish. But actually, at this point now, I think it would be more fearful about recession than anything else. And you can have recession and you can have inflation side by side to a point.
Well, the all-important PCE number comes out tomorrow, so we'll see how that plays out, because that should influence how things are working with the Treasury market, and then obviously with equity. So we'll see. Mish, I got to ask you about the Economic Modern Family channel on YouTube. Ladies and gentlemen, if you haven't already, click subscribe to the Economic Modern Family. You'll be pleasantly surprised. Mish, give the audience a little bit of a heads up on maybe some of the shows and videos that you guys are dropping on that channel.
Yeah, well, there's really been 4 basic directions. Number 1 is actually on our Market Gauge channel, which is my avatar giving stock tips, or giving at least, what you should be looking at in the market right now. So that's number 1.
Which is fantastic.
Thank you. And I actually I'll say this out loud. I mean, some guy was like really hammering me last night in the comments section about how could I take a cartoon seriously? And I'm like,
oh, geez.
This isn't very mature, sophisticated adults won't like it. Well, you know what? Mature, sophisticated adults usually love it, because it's just such a wonderful way to get information. I mean, it's me. It's just a different version of me. So number 2 is the Economic Modern Family itself. We had put out a few videos. We're going to get one out by the end of this week on Granny and Grandpa's reaction to interest rates. And I think that'll be a fun and clever thing. So we're still working on that, but we're also working on more focused to children, more A to Z type of financial literacy, using the family so that kids can start to have more of an economic awareness, not just how do you trade stocks, but how do you even understand what's going on out there? And we're very excited about that because we're trying to take advantage of the buzz on financial literacy for teens, this money that's going in through Trump. These kids can access it at 18, and we're really targeting sort of the 15-year-olds on up. So we're kind of doing a lot of different stuff. And it takes time. We're small. There's only 3 of us doing this, generating these things. We're sometimes just, kind of at the mercy of AI and how fast things generate. But I think I'm very excited. We're really, really excited.
Well, that's
by the way,
great.
Thank you for running the commercial. And we're working on your interview too, by the way.
Well, that's outstanding.
Todd is going to interview all the characters, and we've been working on that. So that should happen within a week or 2.
Well, I can't wait to do it. I know that's going to be very exciting for the audience as well. And yes, definitely for everyone, check out the commercial. We always have it embedded in all of our shows at BTT. So, Mish, this was outstanding. Another wonderful show for the audience. I know I'm enjoying it. I hope you are as well. And we got to talk next week because we got a lot going on as we close out the month. So the next episode airs next Thursday live at 12 noon. Definitely will want to catch that. So, Mish, can't wait till then.
Yeah, me too. I mean, it's certainly no shortage of things to talk about, which is, certainly a newscaster's dream.
That's right. Well, it keeps us on the payroll, that's for sure. So, so on behalf of Mish Schneider, I am Todd Schoenberger. Thank you once again for joining us on on Financial Compass with Mish Schneider. Coming up at 2:00 live, we have the Torres Report. Jose Torres, a senior economist from Interactive Brokers, is going to be getting you prepped for that all-important PCE number that comes out tomorrow. So until then, take care.